Oftentimes in the financial markets, another person's pain is someone else's opportunity. And we have a good opportunity that just came across my screen today. I'm going to share with you in a few minutes. Now, my name is Joshua Belanger of countervest.com, and we'll walk through exactly how this opportunity came uncovered and some of the recent activity in the financial markets. So last week, there was a firm, a family office called Archegos Capital, that caused some volatility in a few specific names. This specific name, Viacom, is a heavy concentrated name that they were in, and Discovery, Baidu, and Tencent are a few others that they were very concentrated in. Now, if you look here at Viacom, you can see here at 101 on the 22nd, and then all of a sudden goes from 101, gets cut in half, trades all the way down to 46. That's a lot of volatility. That's a big shakeup in the equity here. And a lot of people would look at this and say, how and where's the trade? Exactly how you should. Again, someone else's pain is another person's opportunity. Now, some people would look at this and say, well, selling a put may make sense. Well, that could work. We look at volatility here, and we did see volatility, peak up on this level here. This is implied volatility on the chart here, and then kind of come back in. So sure, that doesn't mean that this unwind could cause more downside pressure. You have to have buyers step in as well. So these block trades, the Archegos had a margin call, and it snowballed into this where they're selling and they have to continue selling. So they're selling against themselves in these big block trades. And the margin calls can't be met, and it all gets unwound. And there's blood in the street for these people. But again, it creates opportunity. We'll take a look here on another one that they were pretty concentrated in as well, Discovery, and you can see the same thing here, 78 to 43, a big shakeup here. And this is the reason why oftentimes you'll hear individuals talk about stop losses. This is with stop losses. When you have this is where you can get stopped out of a position. Let's say if you have a longer term perspective on this one. Now, if a stock went from 30 all the way to 78 within just within 1 quarter, you also have to look at that. If you own stock, how do you manage those profits? You have more risk at this position. Even though you had a longer term perspective, you got to be able to manage profits, and you got to be able to manage losses as well. So this is why it's important, especially with the kind of market that we see now. Equity traders specifically, or equity investors specifically, you got to be able to manage those positions, sell into strength, and then buy onto weakness, and be more active and be able to dodge these kind of shakeups that you see here. Now, it doesn't happen like this all the time, but it does happen. So when you look at this, you got to say, wow, it goes from 78 all the way to 43. You get stopped out. It causes a lot of frustration. That's part of the market as well. But one of the ones that came up today, and we're not going to go through every position that they had, but one of the holdings that they had, I think it was the top 5 or top 6 holdings, was this Fairfetch company here. And you can see here, you got a little bit of a shakeup. But interesting enough, even though on the 26 here, we see that it pushed all the way down, and then all of a sudden you get a snapback all the way back into the previous levels here on this candle. Now, it had some more weakness the following day. But again, when you look at this, if you follow candlesticks or look at just price action, what this indicates to me is that, sure, we had some weakness and so forth, but buyers were stepping up here, and we get a snapback. The reason why this was on my radar today, why I tried to get in this position, and now this is not specific investment information. You have to do your own research. This is what I'm doing, and this is only for educational purposes as is. One of the things that I saw late day coming into this Fairfetch, which is interesting, is a buyer, hot money, following into the May contract here. So if you take a look here at the May contract, this came in late day, and these 55s were the ones that were active. Now, at the time, I think these were like 420 by 450. So they're coming in and they're buying these calls at the 55 level. Prices closed at 51.93, 52 days. They're coming in. Volume exceeds open interest. Buying on the offer. These were opened. You see some activity here also in the 70 strike. So it's a little bit too far out for me. But what I tried to do here, and I didn't get filled on this, but this is the position that I tried to get into. I'll try to take a look tomorrow. I didn't really necessarily want to buy the 55 strike. Uh, you know, $4 if you, depending on where you got filled at, 420, 430, 440. It's a decent amount of money here. Now you could have sold. You could have sold the 55 60 call spread, or bought the 55 60 call spread, but I actually was looking to do this one here. So I was buying the 60s and selling the 65. And I was trying to do that for $1 debit. Now I didn't get filled on that. Market moved away from me. But what I was trying to do here was to get filled at $1 and profit on a rise higher. Now I had 52 days, so it has a little bit of position, a little bit of time to play out, and selling those 60s would help with some of that decay that happens. But if we got a fast snapback and we moved into that 60 level, I could probably see, and what I anticipated was to see this dollar debit go from $1 to $3. And that's what I was probably looking for on that position here. So on this one, I was trying to get filled at $1, sell at $3, and that would have been a 200% return on that capital there. So buying at 1, try to sell at 3. That's what I was looking for on here. It could continue to snap back from there, but this is how I was looking to position that. Again, being a little bit more smart with capital, because every account is different. But on this position here, that's what I was looking for. And this is where following the hot money is very important and can find different opportunities like this. So even though that was a stock that was beaten down, it got some buyers coming back in. This is also hard to borrow, so you could see a pretty quick snapback here. But again, hot money flowing into this name here, buying some pretty hefty premium here at the 55 strike in May, and we'll keep an eye on that one. So make sure you like the video, subscribe, and also leave a comment.